Hi, this is Jason, Chief Technical Analyst with ToroAlerts with your weekly market recap for the week ending March 3rd. We had a volatile end to February, but we flipped bullish pretty rapidly to start March off and finished off the week really strongly in the markets. However, we did see some downside price action in the crypto space due to the Silvergate implications of them possibly going under, and they've been a big financer for the space. So let's dive right into the charts and take a look at what we're seeing on the week. Starting out with the cryptocurrency space, the Bitcoin chart, as we said after that Silvergate news, we did see some downside selling pressure in Bitcoin, ultimately breaking back down below this 22,500 or so support level, also below the 50-day moving average now. And so looking to see how Bitcoin shakes out going into next week. Looking like the markets are poised to rally, and so if that happens, you would probably expect Bitcoin to recover a bit, but I think it's ultimately going to come down to whether or not we get more information out of Silvergate, and if there is a complete bankruptcy or closure there, that could potentially put some more downside pressure on the cryptocurrency space, so we just need to keep an eye out on that. But otherwise, on a technical basis, I'll be looking for a break back up above 23 to re-enter some crypto trades. That would get us back up above the 50-day moving average, and we'd also break this descending wedge pattern as well. So I'll be keeping an eye out for that. For now, just sitting on the sidelines with the cryptocurrency assets. Take a look at Ethereum. Similar story. Had a bit of a breakdown to close the week out, down below the 50-day as well. However, we are sitting at a pretty strong support level, currently at about 1550 or so. So we'll see if that holds. If not, our next downside target would be this 0.382 retracement at about, looks like that's just below 1500. And then if we do break down further below that, we've got the 200-day moving average, which we definitely would like to see that hold as support if it gets that low, which is currently at about 1430. Overall, I think as long as we don't have a huge blow up with more Silvergate news and things of that nature, I think the trend can still be to the upside in the cryptocurrency space, but I think we need to see price action prove that first and start to see some more bullish price action in the cryptocurrency space before I look to re-enter those trades. And then take a look at the total cryptocurrency market cap. We're below 1 trillion again, also below the 50-day moving average there, so we'd want to see obviously for the overall cryptocurrency space get back up above that 1 trillion level and above that 50-day moving average, and things would start to look a lot more bullish in that space. Take a look at the S&P 500. So as we mentioned, we actually can see here, if we look at the month of February, our first candlestick in February was February 2nd, and that was when we peaked out at this anchored VWAP position, pushing up about 417, 418 on the SPY. And then really since then, we just saw a pretty steady decline, not a lot of bullish price action in February. And there's actually some seasonality to support that. And so we've gotten through February now, and as we flipped over to March, those first 2 days in March flipped extremely bullish, and we also had a really nice technical bounce off of some really key levels. This descending support line here has been our kind of descending channel that we were stuck in for all of 2022, and we obviously had that breakout above that level in January. And so seeing it drop back down to that level, retest it, hold the support is definitely some bullish price action we're seeing. Also got back above that 50-day moving average, and we had some really strong support at about 395 on the SPY. So we cleared all of those things and got back up above pretty strongly to close the week out. So as long as we don't see a major breakdown below about 390 or so on the SPY, then I think we've looking for some bullish price action here and potentially new higher prices. We did peak out of the anchored VWAP, which is now sitting at about 417, 418 right now. Seeing a price action breakout above those levels would be very bullish in my opinion, because we'd be basically getting above that anchored VWAP level that we haven't cleared for any kind of measurable time other than a day or two, going back almost a year to get above that anchored VWAP level. So if we see that price action break 418 or so, I think that would be even more bullish for the markets. And I still think my overall bias, unless we do see that breakdown below that 390 level, is that we'll continue to head higher in the short term, and that looks like we may be set up for a pretty nice March to be going long some stocks. Taking a look at the breadth measures, S&P 500 stocks above their 200-day moving average is back up to 65%, and S&P 500 stocks above their 50 days back up almost to 54%. So we did bounce off of some levels off the bottom of at the end of February, and we did not break down below that 50 level on the 200-day, which was a key area we're watching for, and we wanted to make sure we held up above that 40% level on the 50-day, and we did hold both those levels, starting to head back up to the upside, so things are looking pretty good there. Jumping over the NASDAQ, triple Qs also saw some big moves to the upside on Thursday and Friday there, and so things are looking pretty strong there. It looks to me like we might have a sub-degree wave 5 moving to the upside here, which lines up with this anchored VWAP. So the next upside price target on the triple Qs I'm looking for is about 316, 317. And then jumping over the Dow Jones Industrial Averages, still kind of sitting out, hanging out in this bull pennant here. So we're really kind of looking for some bigger follow through and a bigger breakout in the markets. We really want to see the DIA break above this bull pennant that we've been kind of trapped in, going all the way back to really in end of last year in December, and so we've kind of been chopping around fairly sideways in the industrials. So a clear break to the upside would be very bullish, getting up above that 343 level. There's been multiple times where we've gotten pretty close and almost broke through, but just quite haven't followed through with that yet. So a breakout above that 343 level would definitely be very bullish for the industrials. And then take a look at the transports. We did get above this descending wedge pattern on Thursday, had a little bit of follow through on Friday. So if we can hold that 15,000 level on the DJT, then I think that's looking pretty bullish for the transports, and we'd be looking for a leg higher there as well. And then the Russell 3000 chart we've been watching for a very long time. Been a really important set of trend lines here that we've got drawn in. These go back all the way to the Great Financial Crisis, and we've really seen price action kind of stay within these ranges for the most part throughout that entire time period. So some pretty key levels to kind of keep an eye on here. That yellow line's our middle channel here, and then this descending channel here was 2022 when we were in that decline. And then we obviously did break out in January outside of that pattern. Then we ultimately got back up to that center channel line, and that's where we corrected. Super surprising that happened, and so once we did start to correct, was potentially looking for a retest of this trend line, which we not only got once but twice on 2 different weekly candlesticks. So we tested that level 2 times, and this last week we really saw a strong push up to the upside in our Russell 3000. So this is definitely looking pretty bullish to me, unless we see a big reversal back down to the downside. This is looking like a nice setup that we could be breaking out here, especially if we get this price action through this descending wedge heading to the upside from here. Then I think that'll be a confirmation that March is shaping up to look pretty impressive for the markets. And then we take a look at our new highs and new lows list. Obviously, if we got new lows breaking out and new highs breaking down, that's not a good sign, and that's sort of what we did start to see in February. However, while new highs were lowering down for most of the month of February, we didn't see a massive increase in new lows, which I think was a bit of an indicator for the markets that we weren't seeing a big breakdown. I think if we were going to see a massive breakdown in the markets, these numbers I think would have gotten a lot higher on our new lows list, and they ultimately did. While they did increase a bit in February, they didn't just skyrocket up, and then they're already starting to reverse now and head lower, and we're also starting to see new highs starting to really ratchet up as well. So definitely looking pretty bullish on our new highs and new lows list for the broader market. And then we jump over to the Russell 1000 for our large caps. Came back down, retested this descending wedge pattern, tested it twice on the weekly candlestick, and pushed through. Got above the 50-week moving average as well, so things are looking pretty good for our large caps. And then on our small caps, Russell 2000, we did fight support on an anchored VWAP for multiple days, kind of trading around in that range. And then ultimately to close the week out, we started finding some follow through to the upside. Got above that 190-120 level, which has been acting as a key area of support and resistance. So seeing a close above that was nice. Seeing some price action break up above this anchored VWAP at about 192, 193 would even be more bullish. And if we do clear that, then we'd be looking for price targets up into the 205 to 210 range for the next levels to watch on the IWM. And then jumping over to our growth this is actually our small caps versus our large caps here. So we can see that with this going up to the right, small caps are actually outperforming large caps. And so we've been, other than a little bit of a dip here, we've been maintaining this trend line to the upside for a while now, really since back in looks like April of 2022. So really small caps have been kind of trending to the upside relative to large caps for some time now, and that looks like that's continuing so far. So we'll see if we continue to see that bottom trend line hold, and if we continue to see this chart move up and to the right, that's letting us know that small caps are do better than our large caps right now. And then this one is our growth versus our value chart. So we're seeing growth continue to show some strength for this last week, and really over a more medium-term trend line, we really saw that breakout of growth over value, and that's when we look back over the last year or so, each time we did see this rally in growth over value, that was a pretty tradable period in the market to trade long to the upside on that. And so far that's panned out, and it looks like especially if we see some follow through with growth continuing to move to the upside over value, that'll, I think, signify that this rally has more legs to go. And then jumping over our bond market, TLT had a little bit of a fake out, dropped down below this 99.45 level, which is a pretty key area of support and resistance. So that was a little concerning when we saw that daily candlestick open below that, but it was nice to see it get back up above those levels and close on the day, back up above that key support area. And then we saw some big follow through on Friday and a big gap up on the TLT, and now back up to almost 102 on the TLT. So bond market's starting to look a little bit better as well. We'll get into rates shortly, but we're still looking like we might be seeing a rollover in rates there. And then we look at the IEF, the 7-10 year, still below a key area of support and resistance at this 95.60 level. But if we see follow through next week where we can get back up above that 95.60, that'll look great for the 7-10 year bonds as well. And then jumping over to our sectors that we track for the week, for the last trading week, we can see at the very top of this list here, natural gas is the winner on the week, up 16.4%, and it's great to see that after we've been talking about natural gas like a lot of people have for some time, just because it was at such an extremely oversold reading. We were actually looking at on the UNG chart, we were about 2 standard deviations to the downside off of the 10-year logarithmic mean, and so significant level of oversold price action on the UNG, and typically when we hit those 2 standard deviations to the downside, that's a pretty tradable level. And so while I got into oil once for a leveraged nat gas play with a pretty tight stop, and that one didn't quite work out. Once we hit that 2-year log standard, or the 2 standard deviations off the 10-year log mean, that was a really nice level to trade off of, and that one worked out pretty nicely. And now we're starting to really rip on natural gas, and it's looking like a great trade setup. I think there's still some more room to run on that one. We're also seeing some strength out of metals and mining, steel, solar, and the gold miner space, all up between 6 and 10% on the week. And then we've had quite a few sectors really that were up anywhere from like 3 to 5%. So overall, that Thursday to Friday follow through really moved most of the market higher. The only losers we had on the week was consumer staples and utilities, and so those are both defensive sectors, so that's also a pretty bullish indication for our markets. The only 2 sectors on the week that had printed red on the week was staples and utilities, a couple very strongly defensive sectors. I think that's a risk-on signal and a sign that we're setting up for possibly a good run in March. Take a look at the global markets. VEU, minus the United States, also saw a rally on the week in global markets, and we bounced off that 52.22 level, which is a key area we're watching. We did have a slight dip below it on the previous week, but then we ripped back up above it. And so we'll see if we continue to head higher from here. But my expectation is most likely we will see global markets do fairly well. China's actually been starting to show some bullish price action, as well as China's injecting some quantitative easing and stimulus into their economy after opening up from their COVID lockdowns. So I think there's definitely some international opportunities in the markets as well. Jump over the gold space, or not the gold, rather the oil space for our U.S. oil barrels. We are sitting in what looks like a bit of a bearish flag, so we'll see if we have a breakout to the upside or to the downside on this one. We also have this 21-week SMA to contend with, which has really been the strong area of resistance on this decline so far. So if we see price action clearly break out above that and hold, then that would be pretty bullish, I think, for oil. But so far we haven't done that, and this does look like this could be potentially a bit of a bear flag setting up for possibly another leg lower. If we do head lower on that, then we're still looking for that possible retest of the 200-week moving average, which is about 66. If we broke down below that, then we'd be looking at this trendline support maybe around 61, 62 or so on oil. But if we want to get bullish oil, I think we really need to see that break above that 21 SMA, and then really getting price action back up above 85 or so per barrel. And if we see price action get above that and start to take off, then I think that'll be a sign that the energy trades are going to probably start ripping again. And I think at some point we'll probably see that this year, but haven't quite got that just yet. Jumping over to the commodity space, the CRB index, still just a bunch of choppy sideways action here. Nothing really as far as any breakdown or breakouts. We really want to see a breakout above the 21-week EMA if we're looking for an upside play here, or if we're looking to short the CRB. We really need to see some price action below that 265 level. Otherwise, it's just kind of wait and see on the CRB space right now, as we've just been chopping around quite a bit sideways, really going all the way back to about September or so of last year. Now onto the precious metals. So starting out with gold, watching this anchor VWAP level at about 162 on the GLD is a key area to watch for a breakout. We did get that on Friday. And also when I'm trading precious metals, I'm also looking at that inverse correlation with rates. It's pretty rare you can make a lot of money in precious metals when rates are rising, and so we've obviously seen rates rise a bit in February, and that correlated with a pretty nice decline and correction in the precious metal space. But it looks like the bottom is most likely in for precious metals, and especially if we can see it hold up above that anchor VWAP at about 171.50 to 172 or so, then I think we got to be pretty cautiously optimistic for the precious metal space, and I think there's going to be some nice trades to the upside in the very short term for that space. Take a look at silver. Similar story here. We're back up above the 200-day moving average. We do need to break out this trend line here, as we've kind of been in this descending pattern really since we broke down in early February, but it does look like we're pretty poised to potentially do that, potentially even as soon as next week, so we'll keep a close eye on that. But as long as we're above that 200-day moving average, I think you could also use that as an entry point and trade off of those levels. If you want to start getting long silver right now, we've got an upside price target on silver at some point when we see this breakout of the next upside price target between about 28 to 28.50 or so on the SLB. So definitely looking like there could be a decent little run to the upside in the fairly near term. That would represent about 40-45% of upside from here on silver. And then taking a look at our interest rates. So the 3-month interest rates are sitting at about 4.75%. We haven't broken up above the where we opened up previously back in early January on the 3-month, which was at about 4.83, 4.85. And so we're kind of just about testing these levels here. So watching these closely to see if this is ultimately going to be a rollover in the 3-month at some point. If we zoom out a bit, we can see that 3 months obviously just kind of ripped to the upside, but now we've really started to slow out on the speed of that increase, and now it looks like we might be potentially putting a top in on that 3-month interest rate level. So we're watching those levels really closely. As long as we're staying below 5% though on the 3-month, then I'm not expecting any big breakout beyond that. But it wouldn't also surprise me to potentially get up and test that 5%. So we'll just keep a close eye on that coming into the following weeks. And then jumping over to the 2-year, we are starting to see a little bit of a rollover on Friday in the 2-year rates, and so we'll see if we can get some follow through on that going into next week. The 2 years sitting at about 4.86%, and we do have some resistance here at about 4.9 or so, and we tried to get up above that on Thursday and it failed, and then we ultimately rolled over a bit on the 2 years. So we'll see if we can get that follow through going into next week, and hopefully see a rollover in these rates. When we take a look at the longer term rates though, we're already starting to see some rollover. So the 10-year had a pretty big reversal on Friday. Also pretty interesting, since Thursday we actually did get that break above 4%. There was many days where we're just kind of up against this 4% wall. Couldn't get above it. Was starting to think maybe that this 4% was not going to get broken. And then ultimately we did break up above it pretty significantly on Thursday. But then we had a big reversal on Friday, and a lot of times when you have a failed move off of a key level like 4% is on a 10-year, and then we get a big reversal on Friday, there's a pretty strong chance I think that we could get even some bigger follow through going into next week and see this breakdown, because oftentimes failed moves equals a fast move in the opposite direction. And so that's potentially setting up for a nice move in our precious metal space. We're already starting to see some bullish price action in our gold miners and whatnot, and starting to see even some price action in gold starting to move up, and silver a little bit. So if we see some follow through to the downside on this 10-year, that's I think going to just increase my conviction on these precious metals trades, and I'm already in a few of them, which we'll get to one of them in a brief minute here. But as long as we continue to see that 10-year stay below 4%, then I'm going to be staying in those precious metals trades, and that'll kind of be my warning signal. If we do start to see a reversal here and we get back up above 4%, then I'll probably exit those trades pretty quickly, but as long as we're below that 4% on the 10-year, then I think this precious metal trade setup is just getting started on the next leg higher, and could be setting us up for a really nice trade opportunity. Then take a look at our 30-year. Also tried to get above the 4% level. Couldn't quite do it, and then saw a pretty big reversal on Friday as well on our 10-year, closing out at about 3.87%. And then jumping over to Euro-dollar futures, not seeing any major moves here, although we were seeing a little bit of a breakdown in February on the Euro-dollar futures, but now we're starting to see those move up just slightly. So if we see a big breakdown in Euro-dollar futures to the downside, that would be a bit concerning. This would typically be giving us a indication on where the rates are targeted for the United States, and so if we see a breakdown to the downside on that, that would be concerning. So I've got an alert set right around that 94.85 level or so. If we see it break down below that level, that could be a bit of a cautionary signal, but so far things are looking pretty good. And if anything, when we look at things like our MACD and our PMO, it looks like it's almost poised to break out to the upside, which would indicate rates are going to potentially go lower. And when we look at our DXY, anytime DXY is ripping to the upside, that's typically bearish for markets. If we look at the month of February, that's exactly what happened. The dollar rose, stock market had a tough time. Now it looks like the dollar's put in potentially a top. As long as we're below that 105 in the DXY, then I think we've got to stay short there, and looking for the dollar to potentially roll over from here. And if we do see that, or even just sideways price action on the dollar, as long as the dollar's not ripping higher, I think that could set us up for a nice March. And then taking a look at the HYG chart, we actually came down. This is kind of similar to the Russell 3000 chart. We had that significant breakout from this trend line that that had been established all of 2022. Broke out of there, came back down and retested it in the month of February. Hit that trend line almost exactly, and then rallied off those levels, which is exactly what you want to see. A lot of times when you get a breakout, you'll come back down and retest those levels and then start to rip higher from there. And so we did exactly that on the HYG, and I really like the HYG as far as an overall market health indicator chart. It's not something I really trade a whole lot, but I really like this chart as far as just a strong indication chart as to the overall health of the markets. Typically when the HYG is dropping like it did last year, the markets were bad last year and HYG was bad, and so if HYG is starting to recover, it's starting to look more bullish, then I think that's telling us we've got some tradable price action in the markets as well to the upside. And then we take a look at our investment grade bonds divided by our IEF. This is a great measure as well for market health, and as long as our 13-week EMA is above our SMA, then things are looking pretty good. And where we are seeing this rise, and we saw a bit of a retest on this level, which was, I guess, kind of the first level I'd be kind of start to have a little caution. And then we did actually break down and almost come down and retest the SMA level on the 13-week, but ultimately saw a big rip to the upside on Friday. So that's definitely, I think, a bullish sign for stocks, and as long as we're not seeing this white line cross the purple, then I think we can continue to play the markets long for now. Taking a look at the put-call equity ratio, we did see quite a bit of volatility on this week. We did see rates for the last couple of weeks, or the levels on the put-call equity ratio, get above 1 multiple times. We actually had a close last week above that level, which is elevated put buying production, but then we dropped back down this week, and while we did get back up above 1, we ultimately settled in quite a bit lower than 1 at about 0.83, so in fairly normalized levels on our put-call equity ratio. And then also saw the VIX really fall apart at the end of the week as well. So we did have a few attempts earlier in, looks like it was February 21st and 22nd, where it was really starting to head up to the upside. Kind of wondering whether we'd get up above that 25 level, which would have been a concern for anybody, I think, bullish in the markets, but we ultimately didn't even get there. And then saw a big reversal to the downside, and now we're well below 20 again, sitting just about 18.5 on the VIX. So things are looking pretty good there, and I think definitely those VIX numbers are looking like they could support this hopeful rally we'll be getting in the coming weeks. We'll go ahead and close it up with one of the trades that I'm in right now. So GDXU is our gold miner ETF, which is a nice trade to enter right now, in my opinion. Especially if we see those rates continue to roll over, then I think this is going to be an excellent trade. But I always like finding, especially on a higher conviction trade like this, I like finding some leverage to increase my upside, especially when I can get in at what I think is a good kind of bottom leveling opportunity. I got into this one a few days ago, so I probably got in actually right around here. probably at about 34.50 or so. It's already up to about 38.50, so I'm probably up about 10% or so already. But things are continuing to get some follow through here. Again, if rates continue to roll over, or at least not rip up above that 4% level on the 10-year, then I think this GDXU trade is going to be an excellent one to stay into. And we're using some Elliott wave math. Our next upside price target on this wave 3 looks like about 101 or so on the GDXU, which represents a massive upside from here. If we measure that out, that's about 150, 160% of upside from here on that trade. Granted, it'll probably take a few months for this to play out. Typically, your wave 3 is going to be, at least 1.618 and as far as time goes on that wave 1, which was 121 days. So this could very well take multiple months to play out, and most likely will. But I do think that 101 price target is pretty reliable, and even if it does take 3, 5, 6 months or whatever to get there, if you're making 160% in a multi-month period, I don't think anybody's complaining about that. So great swing trade setup on this one. You could potentially trade the moves within. This isn't going to just go straight up and to the right on this one, so you could swing trade this potentially multiple times if you want to, or I think this is just a great entry point. You could just set it and forget it, essentially, as long as you've got your stop set. If we're keeping our stop probably below 35 or so on the GDXU, as long as we're staying above those levels, I think you can just let it run. And hopefully we'll see that 101 price target in the coming months, and that'll be a great trade setup for some precious metals. So thanks for tuning in. Make sure to download the ToroAlerts app on the App Store. We've got one for stocks and one for crypto, and you can check us out at ToroAlerts.com.